Opendoor's first quarter results were well received by the market due to the company's efforts to control costs and adjust to a subdued U.S. housing market. CEO Carrie Wheeler attributed the company's performance to operational discipline and its evolving agent partnership model, despite macro pressures like elevated mortgage rates and slowing home sales. Opendoor's revenue was $1.15 billion, a 2.4% year-on-year decline, but 9.3% above analyst estimates. Adjusted EPS loss was 9 cents, narrower than the estimated loss of 10 cents. The company provided guidance for the next quarter, with revenue expected to be $1.49 billion at the midpoint, above analyst estimates of $1.45 billion. During the earnings call, analysts asked questions about the company's slowed acquisition pace, inventory health, agent partnership structure, cost savings, and potential rollout of the agent partnership. CFO Salim Freha mentioned that acquisition volumes would follow seasonal patterns, with a likely ramp in Q4, and that current spread levels and market uncertainty are influencing the cautious approach. Freha also explained that inventory valuation is actively managed with pricing levers, and recent acquisitions are starting at higher contribution margins. CEO Carrie Wheeler described the agent partnership pilot as an evolution of existing agent relationships, emphasizing that the company will continue to offer both direct and agent-mediated options. Wheeler also stated that conversion improvements are the main signal for a broader rollout of the agent partnership. Looking ahead, key catalysts for Opendoor include the adoption and impact of its agent partnership pilot, sustainability of cost reductions and margin improvements, and management's ability to navigate inventory mix and resale timing to maintain profitability. The evolution of the U.S. housing market will also be a critical external factor. For more on stocks and crypto, follow Ascencore. Thanks for watching and have a nice day.